you were in a very strong market, and as Dow kept moving up, we would get more aggressive. And so toward the end, we might have been selling a couple million shares a day when it got up to 56 or some price like that. That we were hoping to get out of it, out of the common by the time that they handed us all the common. And like I say, it worked out to the day. We were kind of lucky on that. I mean, we could have ended up with 10 million shares, but we were going to quit, obviously, when we got to the amount that was going to be handed to us.
Why don't you like Dow or the other chemical shares?
Well, we've never owned chemical shares. We own a specialty chemical company at Lubrizol, but I can't recall a chemical common stock we owned. We bought the preferred stock of Dow, I mean, because we wanted a preferred position, and we held it. It was kind of interesting. We bought that stock in July of 2008, the preferred. And they were going to acquire, Dow was going to acquire Roman Haas, and they needed some money for it. And then the world fell apart in the fall, and Dow wanted to get out of the contract. They sued Roman Haas to get out of the contract, but it was held that they had to stick with it. So we closed the deal to buy the preferred stock in April of 2009, by which time the market had totally disintegrated. So at the time we closed that, we bought $3 billion worth. It probably wasn't worth tops more than 60 cents on the dollar. So we showed up with $3 billion for something that was worth about $1.8 billion maybe at the time, which is one reason people offer us deals they know will be around at the closing. We showed up for the Wrigley closing too with the Mars family. That was on October 4th or something. But during that whole period, we had these commitments, and that kept me from doing some other things we might have done at that time. The fact that we had this $3 billion going out the door.
What did you ultimately end up making on
Well, we ended up making
shares?
about $1 billion, plus we had about 8.5%. Well, we had an 8.5% coupon on it for those years.
So you made $1 billion even before the preferred dividend that was paid throughout that time.
Yeah, we had $1 billion of capital gain, very roughly, and then we had $255 million a year of dividends during the time that we owned it.
Wow. Okay. I have a few other questions from viewers that I'd like to get to. And Joe, by the way, jump in if you want to as well. But in the meantime, why don't we ask a question that came from Curtis Carson. He says, how many suits do you have in your closet at home? I bet my wife fewer than 5, most over 10 years old.
Well, he would be right, except for the fact that I met a woman in Dalian, China, many years ago, Madam Lee, and I arrived at this hotel in Dalian at about 11 in the morning, and immediately 2 guys jumped into the room. A couple minutes later, I thought, what's going on? They started sticking tape measures around me and everything, and then they showed me a book with a whole bunch of samples and said, pick out a suit. Madam Lee wants to give it to you. And I never heard of Madam Lee, so I picked out one. They said, pick out another. And then I met Madam Lee, and she had started with a sewing machine 15 years earlier, and she employed, or more than that, and she employed 15,000 people, and she was a marvelous woman. So she just started sending me suits. I was thinking of opening up a men's clothing store for a while, but everybody had to be my size. So I literally I have probably close to 20, but they were all made by Madam Lee for me, and I'm very grateful to her. She's come to the annual meeting once or twice and brought her family, and she made Charlie a suit. She made Bill Gates a suit, I think, Walter Scott.
Because you guys can't afford any of your own suits.
Well, not if we don't have to buy them.
Hey, Joe had a question here as well. Joe?
Yeah, the old expression, Warren, that, if you have money, a lot of times you can make money. So back during the financial crisis, when people would love to have Berkshire sort of as an endorsement, or at least if you invest in it, you don't think they're going out of business. So you don't even have to like a chemical company, do you? I mean, if they're going to give you 10%, at that point, all you think about is that they're going to be able to make good on those dividend payments. You don't have to like the financial, or you don't have to like the prospects for growth at that company, do you? I mean, anyone in a 2% world, if they can get 10% that they know they're going to get, it's like a no-brainer for you, isn't it?
Well, it's a fixed income decision, so you have to like. I mean, it's a credit decision more than an equity position. But the equity part enters in. But you're making first of all a credit decision, which is what I made back in 2008 on Dow Chemical, and I made it on U.S. Air back in the late 80s, and it looked like I was very, very, very. They passed the dividend while we owned it. Fortunately, we had a clause in the U.S. Air Preferred where any dividends they didn't pay us compounded at a pretty good rate.
That's unbelievable.
Which
The other people can't get that kind of deal, obviously. And I guess, I mean.
oh, they
Go ahead.
They could have had my U.S. Air deal at 50 cents on the dollar. Not very long after I made
That's
it.
true. That's true. But some of the other, I mean, and you're double your money in 7 years. You don't need, all you need is a credit decision at 10%. You know what I mean?
Well, I haven't gotten 10%. We got 8.5 on the Dow.
What'd you get in Goldman or
double.
What about Goldman and GE? I thought you got almost 10 on those, didn't you?
Yeah, we got 10 on Goldman and GE. We got some warrants there. But I will tell you, in late September of 2008, I don't think there were any other buyers around for it.
There weren't. That's true. But what if the world ended? We'd all be. I mean, you might as well have done it. Either the world doesn't end and you're fine, or the world does end and then we're all screwed, right?
Yeah, what's the difference between, if the world's going to end, what's the difference between dying broke or dying 100 billion in debt?
Right. I heard it only can end once, though. That's something to keep in mind when you're investing in the stock market. You know what I mean? It's not going to, if it ends more than once, I'm not thinking about it right.
Yeah.
Walking Dead, that's
I'm
the
with
case.
you.
Yeah, right. Walking Dead.
Okay, right. Joe, we're going to continue this conversation in just a moment. And folks, when we come back, don't forget, we have much more to talk about with Warren Buffett. We've got today's top stories. We still haven't talked Unilever. We haven't talked Donald Trump and politics. Stick around. You can still get your last-minute questions in with the hashtag #AskWarren. Squawk Box will be right back.
Becky is in Omaha, Nebraska this morning, speaking with a billionaire investor and Berkshire Hathaway chairman. He's a lot more than just those two things, Becky. He's funny.
Yeah.
He's witty. He's a little bit wild at times. I think you can probably confirm that. Warren Buffett CEO is a CEO. This year, Warren, I was watching Creighton the other day, and I was hoping Creighton was going to win. They got a pretty good team, but I can't. These brackets, I told Becky I may not even do them this year. We're going to get to the futures, but
Joe,
it's so hard. I don't know who's good. Kansas. I don't know.
yeah, it's a season with no standout. Creighton started very fast, as you know, but we are going to announce again, probably the next week or so, we'll send it out to our managers. We're going to have the same contest among our employees that we had last year. And,
I love that.
And if they manage to make it, if they can get to the Sweet 16, if there's only one of them, whoever it is, he or she gets $1 million a year for the rest of their life. Now, we also have a prize of $100,000 for whoever gets the furthest. And last year, we had two fellows that tied. One of them knew a lot about basketball. The other didn't know anything about basketball. But they each got $50,000 out of it. And we're going to do the same thing for Berkshire employees this year. We had 85,000 entries last year, but I'll bet we go over 100,000 this year.
That's so fun. That's so great too. And getting all 16 of the 16, it's like, please. I've tried. It's like if you get 10 or 12, you're doing pretty well. Yeah,
but it's not impossible.
I know.
And somebody's going to win. Somebody's going to win 100,000, or they'll divide it up. And actually, some of our individual companies, last year they joined in with a tournament of their own. So I mean, it really caught fire. And what's particular fun is you can go to this website we have, and you can see after each game how many are left and how many have gone for, in the next game coming up, gone for Team A or Team B, and we have a good time.
It is good. Gonzaga now lost, and I like Jesuit schools like you and Xavier. We lost Edmund Sumner. He was so good, and he got torn ACL. I mean that killed me. And then I was going to start watching Cincinnati, then they lost yesterday to Central Florida. It's hard, Warren. Anyway,
I'll tell you what we'll do.
Okay.
Joe, send me a ballot, and I'll have one of the people put it in under their name. I mean, you could be. You can get in.
Last year, he offered to let you be in it, and you didn't send it in.
You know why?
Remember?
Because Warren is very smart, and the side of the trade that he takes, I want to be him. I'll give people money if they get them all right. That's like selling calls or something. He's always on the right side of these trades. No one's going to do it. No one's. He's safe. It's like those people that insure the hole-in-ones. You know what I mean? I'd like to be the insurer. I don't want to be the person swinging. Anyway, we'll get back to this.
That's usually a good idea.
Yeah, exactly. I like to be the house. Let's check on the markets.
The house is where
the house. I'm going to see. I thought the Dow might turn up because you're going to juice Apple today. There's no doubt about it, Warren. And I thought the Dow might turn up, but Apple. I mean, who wouldn't buy Apple after hearing that type of financial outlay that the greatest investor in the
Joe,
world?
I want to emphasize.
Go ahead.
I want to emphasize we have not bought it at this price. I mean, we quit buying when the earnings came out. So if I were buying now, I wouldn't be talking about it for one thing. You know, we're certainly not selling either. But I wouldn't be talking about it. But we're not. I don't want anybody to think we're buying it at this price.
And you know, now, and your IBM stock, that call is looking much better at this point too. And I'm sure we'll talk about that, Becky, a little bit more. You can. We'll probably have a whole segment on IBM, but and that, you know, $172 billion, not $720 billion. So that, who knows where that could run if they get it going there. Anyway, back to you.
You know what, Joe, ask about IBM right now, because we have so much stuff, I'm afraid. I don't want to miss anything, but if you have a specific question on IBM, why don't you jump right in on it right now? You're right, that is a much higher price than where we bought it.
Yeah, what do you attribute that to? What has started, is it been the cloud part of the business has gotten to be a larger part of the results at this point? So that some of these initiatives are starting to bear fruit. Warren, what do you think happened?
Yeah, Joe, well, the whole market has moved so much, to start with. And they increased the dividend. I think there's been some more interest in dividend stocks, and they increased it here recently. But I've got no information for you, IBM, except those two factors. But a lot of stocks, I mean, they really moved in the last few months.
Yeah, they certainly have. I guess that'd be a good segue to lead into President Trump, maybe, Beck, because you can attribute it to a lot of different things. I have people every day come in here that said the market was going to go down 5,000 points if he got elected, and they're all like, "You ought to see them dance now," explaining this war, and they're it's the equinox or something. I mean, it's the witches. They come up with all kinds of stuff to attribute why the market's up. They'll never say that maybe some of these policies could be pro-growth, but some of them are pro-growth. You must like some of them.
Last year at our annual meeting, and it was clear I was for Hillary, but I got asked a question about the market based on who got elected, and that does not. And I said America's going to do fine in terms of economically under either candidate as president. People who mix their politics up with their investment activities, I don't think that makes sense. I've watched it all my life, and obviously, probably half the time of my adult life, I've had a president other than the one I voted for, but that has never taken me out of stocks. I mean, the American economy, we're up to number 45 or so, and we've done awfully well. If you mix your politics with your investment decisions, you're making a big mistake.
Although in terms of
Charlie Munger.
Oh, sorry, Beth.
Go ahead.
Just one last thing. You talk about how great democracy in this country is and the dynamism. And I have seen people, in the Journal op-ed or wherever, just people that say that democracy is ending. They look at this election, they say, wow, this is like the way it happened, another orderly transition of power, and it was the way that it was done. It brought tears to their eyes in terms of this is still this is a prime example of how well things work and that democracy is alive and well, right?
Yeah, Joe. In 1951, I proposed to my wife, and my father-in-law was the most conservative guy in Nebraska, except maybe for my dad. My father-in-law said, "I want to have a talk with you." So I went over to his house to have a talk, and he sat there and he said, "Warren," he says, "I just want to absolve you from any worries. You're going to fail. And the reason you're going to fail, my daughter may starve to death, and you're going to fail, but I'm not going to blame you because the Democrats are in, and they're all communists." And I listened to this thing for 3 hours, and I almost withdrew my proposal at the end. But I have seen people make economic decisions based on their political feelings, and it is not the way to do it.
Well, Warren, if Bernie Sanders got elected, I might make a few investment decisions. I'm sorry, but that's just me.
Yeah. I understand. Yeah, well, all my friends feel that way, on one side or the other. But I grew up in a household where, when Roosevelt got elected for the third term, my dad said, there'll never be another election. We couldn't have dessert at our house if you were a kid unless you said something nasty about Roosevelt. But I bought that stock in 1942 when Roosevelt was president, and it worked out pretty well.
Charlie Munger made some comments also at the Daily Journal annual meeting just a few weeks ago, Warren, and he said that, look, he's mellowed on Donald Trump because he had some things that were not so nice to say about him before. He also said, look, not everything he's doing I disagree with. He's in favor of some of the things he said about Social Security and some of the other moves he's made. Have you mellowed as well?
Well, I would say that I would agree with Charlie on that in terms of the entitlements and Social Security. And I certainly, you can't help but feel, if you're in business, everybody, there are a lot of regulations that I think probably have gone too far. So I will judge President Trump after 4 years based, number one, on how safe the country has been kept. I mean, that is the number one job of the chief executive of the United States. And that's not an easy job. And I'm not thinking of random killings or anything like that. I'm thinking of weapons of mass destruction. I mean, that's my number one worry, and that's the number one test I have. Secondly, I'll judge them to a degree, although they have less control over this. Well, they need a little luck on weapons of mass destruction too, but how the economy does overall. And then third, I'll judge them on how, if the economy does well, which I expect it to do, how wide the participation in a better economy extends. And those are the three primary tests I would have applied to Hillary Clinton or to Donald Trump. Meaning that if he passes on all three of those, you would consider voting for him in 4 years? Well, it depends who he's running against. I would say it'd be unlikely, but those are the three tests. I mean, those would have been my tests for Hillary Clinton. I think being president of the United States is the most important job in the world. It's not all powerful, and you need luck. But we've had weapons of mass destruction. Kennedy got us through the Cuban Missile Crisis, and somebody else might not have. And when you look at North Korea, trying to get an ICBM that can hit the West Coast and with warheads and everything, I mean, it is very, very, very important that you have a president for whom that's the number one priority too. And I actually think that with both Hillary Clinton and Donald Trump, they have an understanding of that. And if that's number one, and I think the odds are good, as I said last year at the annual meeting, that we'll have prosperity in any 4-year period. It's not a cinch. I mean, there are certain times when the economy has hiccups, but the odds are pretty good that any president has a reasonably good economy, and then I would like to see more people share in that good economy. All right, let's go through this one by one. In terms of trying to keep us safe, part of that must be appointments like Secretary of State. What do you think about Rex Tillerson in that position? Well, I don't know any of the appointments well, but I certainly think Rex Tillerson makes a lot of sense. I mean, you've got an absolutely outstanding person. And incidentally, I would say this too, because you get a lot of this in politics. Rex Tillerson is going to be working for the United States in that job. I mean, people that get all upset because he was with ExxonMobil or something, or because he's got a fair amount of money. I've seen a lot of people enter high levels of public service, and I think the great majority of them take it very seriously that their employer is the United States. And so I don't worry at all about the fact that somebody comes from the oil industry or that they've got a lot of money or anything of the sort. I do think most people rise to the occasion to quite a degree. Not always, but to quite a degree. So I don't know. Tillerson, I sat next to him one time at dinner, but he'd be the kind of person I would choose. There's also people like Wilbur Ross, Stephen Mnuchin, Gary Cohn, who are all in these cabinet level positions too. They're Wall Street guys. They're smart guys. And again, I would say that those people, none of whom I know well, but I know of them and I know people who know them. And I would say that they will take very seriously the fact that they are in public service. I mean, you may run into an exception every now and then. Spiro Agnew didn't come through too well, or a few in the past. But I think people take it seriously. In terms of judging the economy, a lot of that's going to be done based on, we've seen the stock market run, as Joe brought up to this point.
The next thing people are waiting to see what happens is tax reform. Before that happens, they're going to be looking at Obamacare for a repeal of that. All of these things will weigh on the economy. What's your overall take of the direction that we are headed right now?
I think, just on a probability basis, not specific to actually to any given administration, I think the odds are very high that any administration ends up better 4 years, with the economy better 4 years later than at present. I mean, but I would say that. Absolutely.
But what about the specifics of what have been proposed in terms of potential border adjustment taxes, in terms of immigration policies, in terms of regulation rollbacks, all of these things?
Yeah, I would still say I think the economy will be better off 4 years from now, even though I disagree with some of the specific policies. But I disagree with the policies of most administrations, of some policies. Border adjustment tax, I mean, it's an import tax, and an import tax is a sales tax. You're looking, we're at the Nebraska Furniture Mart. The store, it's in several buildings, does over $400 million a year. 75% of what you see is imported. I mean, if we pay an import tax on it, our customers are going to pay for it. It's a sales tax, and it's a sales tax, in this case, on items that are not yachts or anything like that. They're things that the ordinary person buys. So it would be a big sales tax. I think the president said initially that it was maybe too confusing or too complicated or something of the sort. My guess is that the Republicans, you don't get a shot like this where you control both houses in the presidency too often. They'll want to do things. I mean, McConnell will want to do things, and Ryan will want to do things. And my guess is that they will find doing something really comprehensive will be too difficult, and they'll want to get something done. You remember Russell Long by any chance?
Well, I know the building, the
yeah.
Long building in Congress.
Well, Russell Long was Huey Long's son, and he was head of the finance committee. He was a senator. He actually owned Berkshire Hathaway stock, and I knew him just a little bit. He's the guy that coined that line, don't tax you, don't tax me, tax that fellow behind the tree. And if you're going to be revenue neutral, without the craziest dynamic scoring in the world, if you're going to be revenue neutral, it's going to get very, very tough. You'll have everybody in there saying tax the fellow behind the tree. And I think they will end up going for something not as dramatic as they might even like to do, because they simply don't want to spend the time and the political capital getting it done. But people realize if you control the whole place, you better get your stuff done at that time. And they look at the first term of the Obama administration, and you use up capital and use up time, and pretty soon they're thinking about the midterm elections and everything. So I just have a feeling when the Treasury Secretary says we'll try and have this by August or something, you're not going to get a really 1986 type overhaul or a 1954 type overhaul or a 1969 type overhaul in that kind of a time period.
Meaning you think something gets passed with lower rates, but not a border adjustment tax or something that we haven't tried in the
right.
past?
I don't think it's likely to get terribly complex, because I think as soon as you try and make it revenue neutral and you change one big segment, you will have every lobbyist in the world in there who says that isn't reform. My idea is reform, but not your idea. So that's just, who knows? I mean, you've got some master legislators and McConnell and Ryan that will be handling things so as to get as much as possible of what they would like through. But I think if you're trying for speed and you're trying for complexity, I think complexity will give way to speed. But I don't know any more about this than your viewers.
You mentioned that the border adjustment tax would be something that's a tax on consumers. I can certainly see that happening. But you also have American manufacturers who say, we're not competing on a level playing field. We're the only one of 35 OECD nations that doesn't have some sort of a border adjustment, some sort of a VAT or something along those lines. And as a result, it's hurting us, and we are not able to create jobs here as quickly. And that has been an issue that's been very important to the president. Is there another way around that?
Well, I wrote an article for Fortune a long time ago on import certificates. It's too long to describe here. But there are various approaches, and I actually have one I kind of like, but it would take a long time to explain. But I understand there's an article today by Marty Feldstein, I may be wrong on that, about how the dollar would adjust upward enough so that you really would be buying these things cheaper.
That's the idea, that in theory over time the dollar would adjust, but it's never been tried.
No,
so
I would not bet on that. For one thing, that kills exports. So free trade is wonderful for the world and for the United States, but its benefits are diffused among 320 million people. You buy your bananas cheaper because we don't try and produce them in the United States, but the penalties from free trade are terrible to specific industries. And as an investor, I can make a dumb decision on owning a shoe company, but if I own a good insurance company, I can diversify away the problems. If you're a 55-year-old steel worker, you can't diversify away your talents. I mean, you've had it. If steel or textiles or shoes become subject to total, it all moves offshore. So you want to have free trade, but you also have to take care of the people who, through no fault of their own, have spent their life learning one profession. And you can talk about retraining and all that, but it just isn't practical. And just take Berkshire Hathaway. We started with 2,000 employees in New Bedford, Mass, turning out textiles, and that business was doomed. And we had workers there who really they didn't have alternatives at age 50 or 50. Some fair number of them just spoke Portuguese. They didn't have a chance. And a rich country that's prospering because of free trade, and as the world is prospering, should keep the free trade as much as possible, but they also should take care of the people that become the roadkill, when industries
apparently
move.
That's been a problem. I mean, if you
It's
look
a
at
real problem.
the election was a huge referendum on that.
Sure.
And both the Democrats and the Republicans are moving away from the idea of free trade, depending on the free trade that we've seen as free trade to this point.
Yeah.
Some of them will say this isn't free trade.
Yeah.
But what happens now?
You've got to take care of those people. And if I were somebody that had spent 25 years in shoes or textiles or you name it, and somebody came around to me and said, this is great for the world and it's great for those guys on the Forbes 400, but it's just too bad because you lose your job and that makes, we can buy our shoes a little cheaper, our underwear a little cheaper, our steel a little cheaper abroad. I would say that a rich society should figure out a way to take care of those people.
Okay. Warren, we're going to continue this conversation in just a moment. Our guest host again this morning is Warren Buffett, and he's been talking with us for an hour and a half at this point about things that have been going on. And Mr. Buffett, I can't believe it's been an hour and a half, and we have not gotten to a massive piece of news, and that would be the Unilever deal.
Right.
It was, I guess, just a little over a week ago that we first heard about this deal that Kraft Heinz and 3G would be putting together. Deal came out on Friday, and some news broke on it. Stocks for a lot of the other suitors that were not being considered, stocks like Mondelez and Campbell's dropped. Stocks of both Kraft Heinz and Unilever soared. By Monday, all of that had been kind of doused. What happened?
What happened? I can tell you what happened. Most of what I can tell you for sure, and then the others, a couple of things I have to draw inferences on. But the Alex Baring, who's chairman of Kraft Heinz and part of the 3G operation with Georgie Paulo, and they and I agreed on making a friendly offer for Unilever if they were open to it. And Alex Baring went over to London, I don't know how long ago, maybe 4 weeks ago or whenever it would have been, and met with their CEO and had a conversation, and he brought up the idea of possibly making an offer late in the conversation, and he didn't get a yes, he didn't get a no, he got perfectly polite conversation, and the CEO actually, Greg Abel of Berkshire, known him 20 years ago. I mean, we had nothing but good reports about him. We felt fine about it. So Alex came back and said that he hadn't been thrown out. And so would we want to go ahead? So we went to see him again, and maybe 2 weeks later, and he had a letter that was an outline of a deal, which he thought if he got a neutral response he would give, but if he got a negative feeling, he would not. And he went over and felt he got a neutral response and therefore gave the letter. Now, I might mention, it reminds me of that old story about the difference between a diplomat and a lady. I don't know whether you've ever heard that or not.
No.
But, well, if a diplomat says yes, he means maybe. If he says maybe, he means no. And if he says no, he's no diplomat. And if a lady says no, she means maybe. And if she says maybe, she means yes. And if she says yes, she's no lady. So he probably got a maybe and didn't know whether it was coming from a diplomat or essentially. I mean, that's what frequently people get. I don't work on acquisitions that way myself. I just go in and say, if you want me to make an offer, I'll make one. If you don't want me to make an offer, I won't make one. And I'll tell you a price if I do it. But there's usually much more of a mating dance than that. And so you get this, I'll take it to the board and all that. And you're dealing with different kinds of people. Some people are different cultures. They're more polite than others and so on. So Alex took it as being a maybe and gave this letter outlining a deal to Unilever, and it was said it would go to the board. Well, it became very apparent that Unilever did not want this offer based on, within a few days, press reports. For one thing, it leaked somehow on a Wednesday prior to the Friday one. And so on Saturday, I got, after that Friday, I got calls indicating that the offer was unwelcome. And I said, if it's unwelcome, and Georgie Paulo said the same thing. I mean, if it's unwelcome, there is no offer. I mean, it was only intended to be presented if there was a possibility. Now,
it was never intended as a hostile offer?
No, zero. And on the other hand, it may have been interpreted that way. And I can't argue about that. So if people say we don't like the price, that's usually a maybe. I mean, and
is that what was said in this case?
Well, that was said the first time. It wasn't said the second time because when I was called about it by a representative of Unilever on Saturday, I just said, I mean, if this is regarded as hostile or unfriendly, you don't have to worry about it. There isn't any offer. But if it's simply because you're negotiating, which people often do, when they take it to the board and they say, well, it's not enough money and all that, and then I'm not a negotiator myself, but the 3G people are more that way. So, but once the three of us learned that it was regarded as unfriendly, we had no intention of making one, and I think the Unilever people understand that now.
Is this a case you're saying of the Unilever CEO being exceedingly polite? And
well,
that's
it can be polite. I mean, it can be differences in culture, even in the way people express themselves. I mean, Alex's second language is English. I mean, I've seen misunderstandings before, and that's one reason I like to do it the way I do it. I mean, when I went to Precision Cast and Mark Donegan, I just said, I will make an offer if you want me to, and if you don't want me to, forget it. I just said the same thing at BNSF. But that's not the way it's usually. There's usually more of a dance back and forth, and part of that's sort of what subtle law is. Now, the law is much different in the United States than in the UK. Well, but in any event, within an hour, we got across to them that we were not making a friendly offer, so we would go away.